You're listening to Uranium Spotlight on Tuesday, September 3rd, 2024. Brought to you by Pure Point Uranium Group, your exploration partner in Canada's Athabasca Basin. Amidst surging uranium demand, Pure Point's continuous 2024 exploration across their vast portfolio, backed by industry giants, underscores their focus on the next major discovery. And now your host, Chris Frostad.
This week on Uranium Spotlight, we look at the impact of SMRs, potential lifting of the Swiss nuclear ban, and China's growing nuclear dominance. Despite Kazatomprom's announcement of a 17% reduction in its 2025 uranium production forecast, the spot price of uranium dropped $2 last week, closing at $79 US per pound U3O8. This counterintuitive price movement may be attributed to short-term market dynamics, including financial traders pulling back from the spot market, leading to temporary weakness. However, the long-term implications of reduced supply from Kazatomprom, the world's largest uranium producer, are likely to create upward pressure on prices, especially as demand remains strong and new supply is slow to come online. The supply deficit forecasted for 2025, around 20 million pounds, could still drive prices higher in the coming months. The recent U.S. ban on Russian uranium imports adds further strain to the supply side, potentially setting the stage for a price rebound. While uranium prices may experience some short-term fluctuations, the broader market fundamentals point towards a tightening supply-demand balance that could see prices return to the high 80s or 90s within the next 6 to 12 months, especially if supply disruptions continue and demand remains robust. As investors in the uranium market search for the next big catalyst, small modular reactors, or SMRs, and microreactors have emerged as a compelling narrative. These compact reactors, touted for their modularity and scalability, are being positioned as a crucial component in the global shift towards low-carbon energy. However, for those closely monitoring uranium equities and commodity prices, the key question remains, will SMRs significantly impact uranium demand and consequently prices? While SMRs represent an innovative advancement in nuclear technology, their impact on uranium demand appears to be more incremental than transformative, at least in the near term. Current estimates suggest that around 40 SMRs would be needed to match the annual uranium consumption of one traditional large nuclear reactor. Given this ratio, even the aggressive deployment of SMRs are unlikely to generate the kind of demand surge that significantly moves uranium prices. One factor that could influence SMR deployment is the rising energy demands of AI processing centers, which are increasingly considering SMRs and microreactors as stable power sources. However, even this potential driver is expected to increase SMR deployment by about 25%, adding only a modest layer of uranium demand. By 2044, this could translate to an additional 7.5 to 8.5 million pounds of U3O8 a year, roughly 4% to 5% increase in global demand. To put this in perspective, uranium prices have seen substantial volatility in recent years, ranging from $25 to as high as $120 a pound. A projected 4 to 5% increase in demand over the next 20 years is unlikely to exert significant upward pressure on prices, especially in a market influenced by larger macroeconomic factors, supply disruptions, and geopolitical dynamics. For investors with a shorter horizon, measured in months and years rather than decades, the impact of SMRs on uranium prices might be more of a slow burn than a sudden spike. While SMRs are an exciting technological development with long-term potential, their immediate influence on uranium markets may be more about creating a stable, incremental demand base rather than driving the next bull market in uranium. As such, while SMRs and microreactors deserve attention, they should be seen as part of a broader portfolio of factors affecting uranium prices, rather than the primary catalyst for significant price increases in the near future. Switzerland's government is now opposing the country's current ban on building new nuclear reactors, signaling a significant shift in its energy strategy. The Swiss energy minister emphasized that all options must be on the table as the country aims to achieve net zero carbon emissions by 2050. The ban on new reactors was first implemented in 2011, following the decision not to replace any of the existing ones. This policy was later confirmed in a 2017 referendum. However, a 2020 referendum set the goal for Switzerland to reach net zero emissions by 2050, and the government now acknowledges that renewables alone won't be sufficient to meet this target. Currently, Switzerland sources 61% of its energy from hydropower and 29% from nuclear, making its energy mix relatively decarbonized compared to many European countries. Despite its strong clean energy sector, Switzerland still relies heavily on imported power, particularly from France's extensive nuclear fleet, which comes at a premium. Expanding its own nuclear capacity beyond the 4 reactors currently in operation could reduce this dependency and lower energy costs for Swiss consumers. The minister also noted that while it might be 15 years before any new reactors are operational, preparations and construction would need to begin immediately to meet that deadline. Although Switzerland is a small but wealthy country, it may not require a large number of new reactors, but can likely afford to invest in those it needs. This development could have significant implications for investors in uranium equities, as it underscores the growing recognition of nuclear power's role in achieving net zero targets, potentially driving demand in the uranium market. China has recently approved 4 new Westinghouse AP1000 reactors, adding to the 11 reactors approved earlier this month at 5 nuclear power plants along the nation's coast. This brings the total number of approved reactors this year to 15, a significant jump from the previous years, where approvals ranged between 4 and 10 reactors annually from 2019 to 2023. This surge in approvals underscores China's strong commitment to expanding its nuclear energy capabilities. Another clear indicator of this commitment is China's substantial stockpile of U-308, which currently stands at 284 million pounds. In comparison, the U.S. holds 90 million pounds and the EU has 92 million pounds. The nearly 200 million pound difference highlights the scale of the nuclear fleet China is planning, given that its current fleet is only about half the size of those in the U.S. and EU. Looking ahead, China is expected to surpass both the U.S. and France in the number of operational reactors by 2030, according to The Diplomat. While the U.S. and France currently lead in reactor numbers, China has been steadily closing the gap and is poised to overtake them soon. The U.S., for instance, spent 15 years constructing its last 2 reactors, commissioned at Plant Vogtle in Georgia last year, and currently has no large-scale reactors under construction. France has 1 reactor under construction, with several more in the planning stages. In contrast, China has 30 reactors under construction and continues to commission multiple reactors annually, further solidifying its position as a global leader in nuclear energy expansion. ATHA Energy has initiated Phase 3 diamond drilling at the Gemini project in Saskatchewan's Athabasca Basin, focusing on expanding the high-grade Gemini mineralized zone and testing promising regional targets. This phase targets mineralization at depth and along parallel structures east of GMZ. Additionally, drilling will explore 2 geophysical anomalies at Gemini East and West, both showing strong potential for new discoveries. Meanwhile, at ATHA's Angelak project in Nunavut, ongoing drilling continues to expand mineralization along the LAC 50 trend. The program is on schedule, with completion expected by early September, followed by the release of radioactivity results. These updates underscore ATHA's commitment to advancing its projects with significant potential to enhance uranium resource bases. The Gemini project, in particular, shows strong similarities to Cameco's Rabbit Lake trend, indicating a district-scale potential. ATHA's strategic focus on large-scale exploration across its portfolio aims to unlock substantial value in 2 of the world's most prolific uranium regions. And that wraps up your Uranium Spotlight coverage for this week. For more news and events from the world of uranium, please tune in next week to Uranium Spotlight.
You've been listening to Uranium Spotlight, your weekly podcast dedicated to delivering the latest news and events shaping the uranium fuel market and its critical role in the global energy landscape. Brought to you by PurePoint Uranium Group. PurePoint actively operates a portfolio of advanced uranium projects in the world's richest uranium district and has established partnerships with some of the largest uranium suppliers worldwide. While our passion for this subject is undeniable, it's essential to clarify that the information presented here is not investment advice. Instead, our goal is to offer an unbiased and comprehensive review of recent events that could impact uranium prices. Join us again next Tuesday for Uranium Spotlight.